All right, we're good.
It says recording.
Oh, yeah. So I think we are live. So now we are. Yeah. So what I do is I generally just give it a minute or so just to see, make sure that everybody's in just before we start chatting.
Okay.
There we go. And if we are good, yep. And we are live. And then what I'm going to do is I'm going to hit the live button to go live on Facebook. I hope it's connected to my work one and not my personal. Or actually, it doesn't even matter. Or if it's, oh, I might have lost you. Sorry.
No, I'm still here.
You're still here? Oh, I can't see.
Oh.
Okay, hi. That was weird. Maybe I can't go live on Facebook. I love how we can figure this out. We just go with the flow. No, it's not going to do it. So we're just going to shrink that. Okay, so we are not going to go live on Facebook, but we are live on our webinar. So that's nice. And it's Wednesday night. Thanks for joining me tonight. Thanks for joining me tonight, Jen. This is exciting.
For having me.
Absolutely. So what I'd like to do is actually, I've known you for about 13, 14 years now, because we used to work together. You were a mortgage agent, and then you traded in your hat. Now you have your life
Went to the dark side. Yeah.
Yep. But at the end of the day, you're still protecting your clients and all their assets, right? So which is pretty cool. It's just in a different format now. So I'm going to let you introduce yourself in terms of your journey as to coming out of mortgages and going into insurance.
Okay. Well, it was a funny opportunity. It kind of stumbled upon me. I didn't stumble upon it. And it was a Betty of the Year, doing research on insurance and the brand and whether it was going to work or not, and long interview process. And the more investigating I did in it, I love mortgages. I love that side of the business, but it was interesting to be able to have an office space and to be able to have a team with me. And that's really the Desjardins brand it's very neighborhood based with the team. They really want you to have at least 3 or 4 full-time staff that are all licensed. And it was just something different. And you know what, I mean, you know me and Ryan with the DQs, and we it's kind of fun to do something different, and we're like, you know what, let's give it a whirl. And I always wanted to go back to school, so it gave me a chance to go back and get my OTL license and the LQP and of course mutual funds. So we opened on March 1st, and we took over a book of business from a previous agent, so it's been going good.
That's exciting. So opening March 1st. And what area, where's your office located now?
So it's Fennel in Upper Ottawa, in the Rexall TD Canada Trust Plaza there. And we service we service all of Hamilton and Haldeman and Stony Creek area. But again, they are neighborhood based. So our current book of business, a lot of it is East Mountain, to Upper James, but we've got Ancaster clients, Caledonia, sort of all over the place. But yeah, our office is there, but we are, again, we travel to meet with customers if we have to. So yeah.
Oh, that's perfect. Now with all the changes that actually, like with COVID, like, have you been you've still actively been going in the office, but I think you've put different measures in place too, haven't you?
Yeah, it's been crazy. So when the Ford government came out and put the state of emergency in place, we didn't know if we were going to be open, if we had to shut down, but insurance, same as mortgages and banking, is essential. So for the first week, no one came in the office except myself. The kids were home, so I found it too tough to be here, but I was still at the office, and then slowly the team started to come back in. So we're pretty much all back to normal now, but there's law firms in where I am, and a few other businesses that have kind of shut down. So our office really is low risk. So we're still there, servicing people via phone and email and whatnot. So it's still business as usual. I haven't seen anything. Perfect. If anything, it's actually busier. So.
And I almost wonder if I'm finding the same. It's business is still going, people are still moving, people are refinancing and purchasing and such too. But I almost think some people even have a bit more time to actually now look at what they have, as opposed to, we all know with insurance, the renewal comes in, it just auto renews and you don't even think anything of it, right? But I could almost guarantee people are actually now looking at what they have. People have time, it's like as they're cleaning out the closets or cleaning out the drawers and such, it's like, oh, what is this? And now actually looking and seeing what they have. Do you have more people calling for, are you finding people are calling for quotes now, or just a second opinion?
Yeah. A little bit of both. So we're quoting a lot more because people are home, where normally we try to reach them and they're at work. So we're finding a lot of people, insurance is a hot topic because people are not driving as much. I mean, 80% of the workforce is either working from home or is laid off. So a lot of people are at home, and they've heard lots on the news about getting insurance rebates, and all kinds of companies are offering that. So a lot of people saying, you know, maybe I want to put my car just on comp right now because we have 3 cars as a family and we're only driving 1. So we're doing a lot of that. We're doing a lot of mileage reduction. And then a lot of companies are again offering the rebate back. So it's kind of a mixed bag of everything,
No
but
kidding.
lots more
See,
service.
I never even thought to ask that with Mike. Look at that. See, I never even thought to ask that. So with everybody now working from home, say, with less reduction. So we are seeing a reduction in premium.
What they're doing, I can't speak for all companies, but like we are as a brand, is they're offering a rebate back. So for example, if you were driving to Oakville before and all of a sudden now you're doing a home office and you're only maybe going out for necessities, they're giving a rebate back based on maybe what your total mileage was before, but now you're at home. So we have a lot of clients taking advantage of that. So it's no reduction in coverage or protection. It's just they're getting money back because the risk is less. Just because they're driving less.
And was there a difference in house insurance? Or probably not, right?
No, a lot of companies have extended coverage to be working at home. So they're offering additional coverage at no cost. So some companies are doing that.
Yeah. Well, because most people are now setting up offices, electronics and all that kind of stuff now too, that they wouldn't necessarily have had at home, right?
That's right.
Well, that's good. Okay. I never would have thought of that. That's awesome.
Yeah. So that's a big one. And for sure, people are just, I think they have a time maybe just to sit and, you know, look at their package and say, okay, well, what does this mean? Because most people, like even myself before, I get it. And I don't want to read it, throw it in the drawer. And, you know, it's just something people don't like really to talk about. Because it's something bad, like insurance really covers something possibly that's bad, like something bad's going to happen. So they don't want to talk about it. So I think
or we complain about spending the money on it, right? Yeah. because you don't have anything tangible to hold, like you don't see anything, but we all need it. So, and if we want it, we want the best. It's always bang for buck, right? Like everyone's like that, but just like mortgages, it's not always about the lowest rate or about the lowest payment. It's about what you're going to get when you're going to get covered, right?
For sure.
So we were talking about most people think the biggest coverage to get on a home insurance, let's go to home, is fire, but it's actually not.
People always say fire insurance, and us and being in the mortgage industry, always we're like, we need fire insurance. But really the biggest risk in a house is water, to be honest. It's whether it's a massive rainstorm and it's coming through your roof, or it's a body of water maybe close to your house where a sewer is backed up and you have a body of water coming toward it and leaking through, or coming from underground. So i.e. sewer backup, sub pump malfunction, seepage cracks. So it's water. Like water is the biggest risk. You know, the baby puts a diaper in the toilet and it floods the house.
You name it, right? Absolutely.
So really it's making, it's water for sure. Water is so, damaging to a home. So.
So is there a minimum or a maximum that you should get in terms of coverage? Or is it based on the house, based on location?
It really depends. So some policies will exclude certain coverages because maybe they're in a higher risk area for water. So there might be a limitation on what someone can get. The best bet is really because I think everybody assumes they have water coverage, like they have full coverage. And we find, a lot of people will find they do. And they will have water coverage to a point, but maybe they don't have like sewer backup, or they don't have coverage to help. Like if there's a crack in the foundation, which happens to older homes in this climate, it's freezing and then it's warm and then you have something crack and water's coming through. And if it's finished basement, you're not going to see it because it's behind drywall. So there's a lot of nuances. So really and truly, again, it's best to check and see what you have with your company and find out, okay, what about this? Like, what are the most common things? So definitely sewer backup, but not every policy covers it. So definitely it's best to check and see the fine print, or just have, again, we have all kinds of customers. Maybe they have their life policy with us, but they have their home somewhere else. And I'm always happy to have a look and just review it with them and say, you know what, maybe we're not competitive on price right now, but we can always quote it in the future. But I'm happy to review someone's policy.
Just to see what they have, because they might think they've got the water coverage and they might have water, but they might not, like you're saying, have the sewer or the sewage backup or whatever, right? Or they've got they're
so there's no minimum. It's not
okay. Like you can have so let's say my basement floods and I've got a finished basement. So would you have they would give you like 10,000 to repair the basement? Is there like a minimum amount that would be covered, or is it like a flat fee?
So it's, again, depending on the company. With Desjardins, people can write it. The minimum is 5, like if you opt it, but it's up to you know, it's up
like
to
whatever.
hundreds
Yeah.
of that basically. But some people don't have it. They just don't see the value in it, and that's fine until there's a claim. And it's frustrating.
Unfortunately, that's the hard part, right? Because you
Yeah.
never know what yeah, it's like you don't know what
Yeah.
you need until you need it, right? Yeah. So it's
That's
one
right.
of those. So now, okay, so let's say I do, you know, knock on wood, I don't, my gosh, but say there is a flood. So do we call you, or do we actually call Desjardins? Like who do clients call?
So every company's different. Some, I can't speak for every company, our brand and our office. So we take the claims. I would like the clients to call us because we warm transfer them to our claims department. They have all the information. So they're not calling a toll-free number. We make it as seamless as possible. And then we have a follow-up process in our office for any claims. So that's the way we handle it. Again, I can't speak for every other company, but typically that's.
But that's the personal service. And I think that's what it comes down to as well, right? Like I just found out one of the companies that I'd been dealing with previously was a call center, and which explains all the issues I was having on some of my rental properties, right? Like in terms of coverage. But yeah, so I think it's great having that one-on-one, and that way you're constantly, if you have any questions, you're not getting somebody new on the phone. We're always
every single time.
You or your office, right?
Yeah. And our office is local, and we always answer. We don't have an automation. It doesn't go to, you know, an automation where click one for this. Like one of us always answers. And even myself, the calls are forwarded to my cell phone in the evening. So generally, like a lot of times if you're in an accident, people are in shock. They don't want to talk to a call center, press one for this. So we answer and we're like, you know, first of all, are you okay? Can we help you with anything? Do you need assistance? Do you need us to call 911? So really try to make the process as seamless as possible in a horrible situation.
Absolutely. And it's, because you're right, people do panic and they don't know who to call, right?
That's
and
right.
There's nothing worse than calling a 1-800 number and press here, right? Yeah, it's like, yeah, that's a little daunting. Yes, absolutely. And, well, and then hopefully, and then hopefully they speak English, right? Like, so I don't know that's, hopefully, and I don't mean that in any bad way, but it's like, it's nice to get that friendly voice on the other side. Yeah. Okay, so let's talk about car insurance.
Okay.
So now with Desjardins, like what, and I know because it's all individual for the client, for the age, for their driving record and such kind of thing. So what is it that you guys look at? Like, because I know every company's different in terms of how they look, just like it's no different than mortgage companies, right?
Right. Yep. So it's, I mean, auto insurance there's so many moving parts to it, and it's always changing and it's always evolving. And the information that we get from our actuarial team, it's just, there's so many moving parts. So the biggest one is claims. Like if you have a history of claims, that's a big one. Convictions for sure. So speeding, improper driving, unsafe driving, those are big factors. Another big one is how long you've been licensed for. Are there gaps in insurance? A huge misconception people have is they have a car and then they get rid of it and then they have a lapse of insurance for maybe a year. But they're like, oh no, I've been driving for so long. But if they have gaps in insurance, that's a big thing, because then you're basically starting from scratch. As a new driver, it looks like, because you haven't had that. Yeah. So we really try to educate people, like, don't just cancel it. Like, keep it going, have that coverage, because it makes a big factor.
So if you didn't, so say you didn't have a car though, like what insurance would you keep going?
Well, in that case, then
it's kind of hard in that sense, right? Yeah,
it is. It is. Okay. So there's generally like a little bit of wiggle room, but not like if there's large gaps, then you're starting from scratch.
You're starting from scratch. Okay. So no different than our credit bureaus. Okay. So it's all about no history is rated as bad history, right? So there really is a lot of, it's kind of looked at the same way. Based on that too. Okay, that's so interesting. Okay, sorry.
Yeah, and no. So driver history is a big one. Your continuous insurance, again, claims, convictions. But I'm amazed at how much claims affects things, and it stays on there for a really long time. Okay,
so what about, say you get into that fender bender in a parking lot or something, and you don't want to go through the insurance. So say you just go in and get the work done yourself. So and would you have to report that as an incident, but no claim? Is that how it works? Because isn't it that you are obligated to report, are you not?
You are supposed to report it. Not everybody does. You are supposed to report it, but a lot of people, they don't, because it's if it's something small, it's typically, it may not be worth it depending on the customer. But the rule of thumb is you are supposed to report it, even if it's not, there's a monetary value assigned to it. But again, it just depends on the people.
Because you're not looking for a claim per se. So would that affect you? And I think most people think, so if you say, okay.
Yeah, if it's a not at fault, typically it's not rateable and it doesn't affect you. But at fault claims, they definitely will. They definitely will.
Oh, that's how it works. Okay. Because I have
Mm-hmm.
a story from a client for, oh my gosh, probably about 10 or so years ago. Got into a fender bender in a parking lot. A guy, I think they both collided, and
Mm-hmm.
she thought she was at fault, or however it worked out. Anyway, she gave the guy $500 to get the bumper fixed, and off she went. And I guess they had a statute of limitation, I guess up to 2 years to put in a claim. And he actually
Mm-hmm.
filed a claim and said that he got whiplash and he was yeah, it
Oh
was quite the
no.
bogus story, and her insurance company dropped her for not reporting it.
Really? Oh dear.
And unfortunately it financially sunk them, which was
Mm-hmm.
a shame.
Oh
Like it was
no.
such a
Mm-hmm.
but sad. It's a sad scenario, but it's one that I now tell clients. It's like, you do actually need to report this, because I actually have a
Yeah.
client that this happened to. But I didn't know that until it
Yeah.
happened, sadly, until it happened to her, right? So
Mm-hmm.
somebody
Mm-hmm.
can come back to you up to 2 years later and say
Right.
and then the insurance company's like, you didn't tell us.
Right.
So you
Yeah.
you have to
Reported by
report it.
third party. Yeah. Yeah.
Right.
Yeah.
Because
And
everybody's
it's not
scared that
always
their
rateable.
premiums will skyrocket. That's
I
the issue,
know.
right? But it
Yeah.
doesn't happen.
Yeah. Not in
Okay.
every case. It really, it's so situational. It really is. So it's best just to talk.
Yeah.
And a lot of times people will call us and say, this is a situation. What do you think? And we'll talk to the customer and give them some options and
Perfect. Okay. Now,
yeah.
how are, say, distracted driving, I think is taking over in terms of DUIs, is it not? Or is it, like, that's my gut, I could be wrong. Or
No,
are they still
no, it's a violation. So so that definitely counts. I mean, speeding is a huge one. Like it's,
okay?
yeah, we have just, yeah, speeding is a huge one, but distracted driving is, as well. Improper lane changes, like you see everything, right? Like,
Really?
I have a
Okay.
fairly good driving record, so I don't see it, but the amount of stuff that you see, that people do, yeah, the distracted driving, I mean, and the fines it's just not worth it. It's,
Right. And then all of those add up, which then affects your overall
mm-hmm,
score, for lack of a better
mm-hmm,
word, which will
yeah,
affect your premiums and whether or not
absolutely.
you will get covered.
Absolutely. Yeah.
So,
And I mean, claims will be on there for up to 10 years, where convictions are typically 3. They generally will fall off. One's abstract driving record.
okay.
Yeah, the claims for sure. That's a big one.
A claim will stay up to 10 years?
Mm-hmm.
Oh, okay.
Mm-hmm.
I did not know
Mm-hmm.
that. So,
Yeah,
like, so like an accident? I thought that
correct.
was 6. Oh, it's 10. I thought it was 6. Okay.
It can stay on there, but
Okay.
it depends. Again, it depends on the type of claim. It depends if it's
Gotcha.
not at fault, if it's at fault, if it's 50-50. And also, like, the other thing is depends on how many you have. Like, if you have repetitive claims, then that's going to play a factor. If it's an isolated incident and your driving record is clear, then that will play another factor. Again, it's all this actuarial information that they compile to come up with
Totally
these
got.
risk ratings.
Oh, it's like trying to figure out a credit
Yeah.
bureau score, right? It's like, good God, it's like, who
Right.
knows?
Yeah.
Okay,
Yeah.
so that makes total
Absolutely.
sense. I can try to
Absolutely.
dissect this, but we'll never figure it out. I know. Okay,
Yeah.
so
Yeah.
now let's talk about the young driver, the new one. So say they're like
Mm-hmm.
16, 17 kind of thing. So and say they wanted to get their own car, like, because that's
Mm-hmm.
not cheap, as we know, right? And I
It is
know it's
not.
different I know it's if you're a boy or if you're a girl too. Like that has
Yeah.
an impact on it too, doesn't it? Yeah.
It does. Yeah. Unfortunately.
Yeah.
We have so many young people call in for quotes, and even the females are expensive, but it's astounding what the young men have to pay. But again, it's just,
Right.
it's based
It's
on,
all about, I'm going to say it's based on
unfortunately.
history, right? I know, like stats
Yeah.
almost,
Yeah,
isn't it? Yeah.
it
Yeah.
is.
So it's all
But a
kind of
big
lumped
thing
into
is,
one.
yeah, but a big thing is a lot of people don't realize, even when you get your G1, definitely you should call your insurance company and let them know. And a lot of companies will say, oh, it doesn't matter because it's not your insurance, but it absolutely does. They absolutely should be calling and saying, okay, my son or daughter, or they should be calling themselves the children, saying, I have my G1, got it on July 10th, start my driving record now, because it does make a difference on the overall rating of your insurance. They look back to when you had basically your start of your insurance. So that is important.
I actually did that with Maya, because I was like, I want you to
Mm-hmm.
have history, because I know everything's based on
Yes.
history, right? So the longer, which just helps, not even that like right now, but it helps in the long term down the road too, right?
Absolutely.
Yeah.
Yeah.
So
So when they get
the
their
more you have, the
G2 and
better.
then they're full. Yeah, absolutely.
Yeah, fully covered. Now, do you guys have, do you do the multi discounts as well? Like if you
We do.
have,
Yeah.
So it does generally make more sense to keep all, say, properties and cars with you. Do you get
the discount.
how do the discounts
Yeah.
work? Yeah, how do they
So the
work?
discount, it depends. So we actually do credit bureaus on home insurance for people, and that actually plays a discount onto their home insurance. So you can get a discount based on, good credit repayment. The discount applies depending on the credit on the home coverage or tenant coverage. And then as well, you would get a discount on the auto. If there's multi-vehicles in the house, you can get a multi-vehicle discount on all of the vehicles. So it really does, if you can keep them together. Some circumstances, a home may not fit with some companies. And I have a lot of clients, maybe they have a unique home that we won't write, or a unique car that another company won't write, but we will. So there's so many factors, but ideally, if you can keep them together, it does make more sense to do that.
It does make,
not in every
that's
case.
what I thought too.
Yeah.
It's, again,
Yep.
case by case scenario again, right? Okay, so how about, as you said, as you were talking about unique toys, I was thinking, okay, we're now getting into summer. So what about like the summer toys, or even the winter toys, like the Sea-Doos and all that? Is that something that, that you guys cover as well?
We do. We seem to have a ton of motorcycles that we insure for some reason. We have good rates on them. And then, so we have a lot of people putting on their summer vehicles where they have them on comp for the winter, but they bring them back on the road now. Lots of motorcycles we do, lots of ATV recreation vehicles. So we do quite a bit of that. So
like the water toys as well, like the boats and all that kind of fun
all
stuff.
The Sea-Doo, yeah.
No,
I know. I mean, right now,
I know it's hard. It's cold.
Yeah.
Who wants to go out? Yeah.
Well, that's the thing. And we have so many customers with trailers that they want to have insured starting in a couple weeks. They want, their boats, and they don't even know if they can go up to their cottage. So that's too bad. You kind of feel for those people.
Oh, I thought I saw something that was that announced today that we can actually go out this weekend? Is it as of the May long weekend you're allowed to go to your cottage? I think I had read.
Oh,
I know.
Yay.
I think so. I know.
That's crazy.
I think some of it is actually opening up a little bit.
Okay.
So which is nice, right? So we'll see.
That's
May
good.
long weekend. So here we go. Okay. So now we're talking cottages. So do you cover cottages as well?
We do. Yep, absolutely.
Okay.
The coverage can vary a little bit on cottages because it's seasonal. So it has limited, not limited coverage, but different coverage than maybe your homeowner, because maybe it is seasonal, maybe it's closed during the winter. So people are not checking on it as much. So there could be some water exclusions during the off months. Definitely we do those as well. Yeah.
Okay.
Yeah.
Well,
I was going to circle back to one thing. Ooh.
Yeah.
Sorry, go ahead.
Good. I was going to talk about as you were talking about water with cottages. I was even going to say, what about I was talking to a gentleman earlier who's got a cottage, and he heats it with the fireplace, like the wood stove. So how do you guys look at that? Is there restrictions? Because I know lenders don't, right? Okay.
Yeah, it does. It does vary. It depends on basically the structure of the home, and there are some factors we would look at. So it's case by case.
Like, do you guys have like appraisers? I don't know if that's the right word, that actually goes out and looks at properties? Yes, we have. They're not appraisers so much. They would be more insurance inspectors to make sure, for example, if a home is maybe, there's an older fireplace, a wood stove, maybe it's all wood structure inside where maybe the risk is just higher. There's a body of water close. There's great exposure in the basement for water. Yeah, we would definitely have an inspector go out. The age of the home is old, stuff like that. Yeah. Now I'm going to assume that's not just cottages. That's going to be like for homes as well, right? Like that's just property in general. Yeah. Yeah. Case by case. Yes. But I get case if the house. Okay, gotcha. Yep. Yeah. I mean, right now with COVID, everything, they're not going out right now, but we have a bunch pending that once this clears up, they will be. But for example, if someone has a very, very old roof, they may have an inspector go out and just look at it to maybe there's going to be coverages excluded if the roof is very old. If the risk is great to have a water incident or something. So yeah, they do inspectors, or have inspectors go out and look at properties. Well, it's funny, I know you got to circle back, but of course, I think one thing's leading to another here for us as we talk about properties. What about knob and tube? Because we know that can be an issue, right? Because that's a hard one. We know that's a hard one in general, right? That's a hard no. Okay, that's good. Yeah, that's good to know. Okay, because I know when we get properties, and we're always like, oh, who's going to? You're like, these? No, please don't be knob and tube. Or century homes. That's a hard one to get covered too. That and the historical homes are hard to do. Yes. Aluminum wiring is hard to do. Yeah, so we don't do any of those. They're hard to climb. Yeah.
Yep. There's
Well,
some companies that do them out
that's
there.
good
But,
to know. Okay. I'll add that to my list of who doesn't, because I'm just trying to find the list of who does. So there we go. Okay, good.
I'll let you know if I find anybody.
Perfect. Awesome. Okay, sorry. What were you going to circle back to?
I was going to circle back just to auto really quick. And I'm trying to educate a lot of my clients right now on this. So the biggest thing right now people are finding is insurance is going up. And it is. The province approved an increase pretty much across the board with all companies back in January pre-COVID. So a lot of people are seeing increases in their renewals, and it's just, it is what it is. It has gone up. But I try to explain, because most people are saying, I don't have any claims, I have no tickets, why is this affecting me? And the reality is in the industry, there is a lot of fraud. There's a lot of accidents. The cars cost more. There's more people on the road, and there's just more risk. And the biggest thing is fraud. Like, there's accidents that are happening where people are putting in claims for various things where maybe it didn't happen. So it's costing everybody. So one way I'm really trying to educate my clients to, be able to save based on your good driving record is there's an app actually that we have now, and it's free. A lot of companies are offering it too, but it basically tracks your driving for up to 1,000 kilometers and 100 days in and around there. And it's just based on speed, acceleration, distracted driving. So if you touch your phone while you're driving, you're going to get a ping saying, you're distracting. So you're going to get a lower score that day. But really and truly, it's a savings up to 25%. So on a $2,000 premium per year for a vehicle, you're looking at $500 savings potentially up to, based on your record. So
That's
it's
huge.
a great way to be rewarded. It is.
Yeah.
It's huge. And you can delete the app when it's over.
Okay.
My AirPod fell out. So people are concerned about privacy, and I totally get that. But delete the app when you're done. Get the discount. It stays with you on your policy for as long as you have it. So it's a great way to save based on your driving record, right?
Okay, so what if now you get, say you are one of those distracted drivers, like you're constantly touching your phone, kind of thing. Does that, or what actually if you're touching your, like, because I've got like my newer car, so it's got the GPS, it's
the
all
hands-free. Yep.
The hands-free.
Yep.
Thank you. That's okay, but just not the phone, right?
Correct. Well, it notices the phone. So I tested it because I have the app right now. So I'm doing it. So I was driving the other day and I touched the phone. And when I got home, I checked my score and it said, "We noticed you touched your phone at this part on the link." That's how specific it is.
Way.
And on that particular drive,
okay.
I got a lower score. So it's definitely, and I wasn't texting. I just kind of looked at the time. And anyway, but it does. So it does definitely make a difference.
And did I hear that they can't use it against you, but they can use it for you? Is that right? Or like, because if you've got it for 100 days, like they can't all of a sudden say, okay, your premium was 2,000, now it's going to be 2,500 because, like, you know what I mean?
No,
it's like you get dinged if you use it. Okay.
No,
okay.
No. I don't think I've heard anyone get zero. I think the average person is about 14%. And it really is speed. Like, speed's the biggest thing. And I am a fast driver, so my score is not 25%. It's somewhere around 14.
So you're an average. So you're average. Okay, good.
It is speed. But no, so you can't get a negative, or it can't rate you higher or anything like that. I mean, typically, I think if you were getting the app, you're confident in your driving ability and you want the discount. So it's a great way. But a lot of companies are getting it. So it's a great way to be rewarded for your habits.
Absolutely. Okay, good to know. And so then if I'm with you at Desjardins, like that I can't now use it if I wanted to go to Allstate for talking's sake. So it's all specific to
it would be
like your algorithms,
specific
correct?
Absolutely
to you guys. Kind of like, oh, that's awesome.
Correct.
Look at that. So we actually, so when we chatted, I probably didn't say this at the beginning, but we do have a little panel of question and answers. So we actually do have a question for house insurance, so which is exciting.
Oh,
okay. So when we talked about insurance, so they're saying our house insurance provider asks us the age of our furnace and what our pipes are made of, which we didn't know the answers to. So how important is this to find out somehow and call them back to let them know? And will it potentially lower our premium?
A furnace? We don't ask about the furnace. We would ask about the plumbing, and typically it's just galvanized steel that would be an issue. So as long as it's copper or something other than galvanized steel, for us personally, if it's the steel, then it would be a decline. For some companies, they're more picky. Maybe I can't speak, but furnace, that's an interesting one. I've not heard that. But again, every company is asking
for age. I know, right? What's the one that I keep? The one I hear about is the Kitech plumbing. Have you heard anything about that one? The
That's
Kitech, or
not, yeah, no, that hasn't come up with
that's
us. I mean, we asked the plumbing, but
no.
typically,
Good to
like, I
know.
mean, for the houses we're looking at, it's typically going to be, you know, your copper, and it's not really an issue. But I know Kitech
Right.
isn't.
Right,
Hmm.
you know, and I've come across it in some of the condos or some of the houses, right? So, and I
Yeah.
hear it can be a potential issue
Hmm.
for some, whereas clients have had
Hmm.
it and they don't even notice anything, like everything's fine, right?
Right.
So, yeah, I'm
Yeah.
not sure the whole
Um,
behind that either, but okay.
I don't know. Yeah. One thing I
Yeah.
was going to mention too for hot water tanks. So if you have a very, very old hot water tank, they can exclude coverage. A lot of companies will exclude that. So that's definitely some fine print to check in your policy on renewal. Because if it's over a certain number of years old, they won't cover if there was a leakage or something like that. If you rent it through Reliance, typically they'll replace it after 10 years. But if
I
you
was going to
own
say
it, it's
10
something
years,
to be
right? Yeah.
mindful.
Okay.
Yeah.
Okay.
Yeah.
So
But a
say
lot of
you
people are
have
buying them out now.
what if you had, say, one of those tankless ones? You know, like the
Hmm.
hot water tanks. Is there anything beneficial on a policy, or no? It's just notice that it's not the tank. It's actually just the tankless one.
Hmm. Correct. Yeah.
Okay.
Yeah. There's no
Okay. So
discount as long, it's just
there's no.
really, it's
Okay.
just, yeah, no. I mean, for us anyway, some companies maybe, but not that I've heard of.
That you've heard of? Okay, perfect. Just
Hmm.
asking because my new house has it. So I just thought, you never know.
That's nice. You'll be lots of
I
hot
know. So
water.
there's lots of space. Yeah, on demand,
Yeah.
right? Yeah, this will be nice. This will be nice to see how that works. Okay,
Yeah.
so I think so when we talk a little, if we stick on to home insurance, do you do commercial, like commercial properties
We
for
do.
insurance?
We
Or
do.
are you
Yep.
oh, you do. Okay.
Yeah. Yeah. We actually, we have actually really, really good commercial insurance. So we would do franchises. We would do like Subway, Tim Hortons, Dairy Queen. I've done a few of those. We
Yeah.
do multiplexes. So like mixed use where it might be 6 residential and a commercial, like a variety store in the main level. We do those. We do a lot of condo associations, you know,
Awesome.
higher rise condominiums we do. Absolutely. Yeah. So businesses like we would do, for example, like a massage studio, a lawyer's office, an accountant's office, basically
Yeah.
everything. The only stuff we typically steer away from is manufacturing. We don't look at anything to do with garages, cars, stuff like that.
Okay.
Yeah.
But in terms of, like, say the individual, say the contractor, I think
Hmm.
you do you cover
We do.
provide coverage for them too, don't you? Yeah. Okay.
Yes, we
That's
do.
awesome,
Yeah.
actually.
Yeah.
Okay. I didn't
Yeah.
realize that. I've always
Absolutely.
associated it with just home and auto. So it's nice to know there's so much more attached to that, right? So
Yeah.
which is, yeah, that's
Yeah.
awesome.
Yeah.
Okay.
And business people, as you know, I mean, you know, they're limited on time. They don't have the time, and they certainly don't want to be calling a call center. So I find a lot of small business in Hamilton
Yeah.
do like that local, I'm going to call you. I need to talk to you about the insurance. My landlord needs a certificate. Like they need to talk to someone else. So that's a big thing. So yeah, that's a big part of our
Right.
office. Hmm.
And that's even for us, like with clients who, like when we're redoing a mortgage, like it's more so not on a purchase because I know you need details, but if they're doing a refinance, it's like just because we have to change out the lender kind of thing. So it's
Hmm.
nice to know that because like there's times where we will try to help the client on that. So it's nice that we can
Hmm.
actually also contact the brokers as well, as opposed to going through a 1-800 number,
Hmm.
because then we can't
Yep.
get it done,
I
right?
know.
So I
Yep.
know. So there's so many benefits to working with an independent office over a larger one too,
Hmm.
right? That's what I'm finding. So
Yep.
that's awesome.
Yeah.
So
Yeah.
big thing. So you and I were also talking. So we talked about home, we've talked about auto, but life insurance. It's always
Hmm.
that conversation that nobody ever wants to have, as we know, because who wants to talk about life insurance, honestly, right?
Who I know.
But
Yeah.
I know, but we know we need to have
Yeah.
those conversations. So on the
Yep.
mortgage end, we always talk very
Yep.
generic about mortgage protection plans, right? So it's all about protecting of the mortgage kind of thing, but
Hmm.
there's more to it with that, and that's what you offer as well, like, because you offer both term and whole, do you
We
not?
do term. Yeah. So we do term,
Yeah.
term 10, term 20, term 30, term 100, and then permanent, which has a cash value associated with it generally. And then we do universal as well. So
Okay.
yeah, all
I
three of
don't.
them.
I
Hmm.
actually don't know what the differences are. Okay, so when I know the term, 10, 20, 30. So that's a 30-year
Hmm. Yep.
amortization. Gosh, for life, I can't get out of the mortgage lingo. So what about like, God help me, God help me. So what about what's the term 100? What's that?
Term 100, so it's a permanent plan. It's permanent
Okay.
insurance, so you would have it till you're 100. The difference between that and say a whole life that you would also have for your whole life would be there's no cash value associated with it. So it really depends on the
Okay.
individual and the age and all kinds of things. Term insurance is typically going to be more cost effective than whole life, and it's temporary. Like it's a need. Like it's a mortgage. It's going to pay a mortgage. It's going to cover a loan. It's going to cover like that temporary sort of insurance. That's why it's 10 years, 20 years. Where a permanent is going to be more maybe estate planning, maybe your final expenses, maybe something more longer term. That's essentially the difference. The other thing with a lot of whole life policies, again, not every company is going to be a little bit different, but a lot of them will
Sure.
have a cash value associated with them. So let's say you collapse a policy or surrender it at a certain age, you're going to have a value attached with it that you can take in cash, less any tax and
Okay.
whatnot. But yeah,
Okay.
so it's a bit more
And the difference
flexible
between,
where a term is
yeah, yeah, it renews or like it matures.
correct. Yeah, it can.
Right. And
Yeah,
then
essentially.
let's just say at the end of, like if we talk, say, let's say talk term 20. So at the end of the
hmm
20 years, it comes up for renewal or matures. And you have
hmm
the option to either just stop it or you can actually
hmm
convert it into a different product or take something
Yeah,
additional, right? But like you're saying,
you can
it's more
take
of a
another
temporary
term.
thing. Yep.
Yes. Yeah. The only
Yeah.
thing with that is it's going to be based, the premiums are going to be based on your age at that time. So if you took a
Right.
term 20, you're paying at that time what your age is, but you don't typically, as long as you're not increasing the face value, you don't have to go through insurability questions, which is good because
Oh, you
health can
don't. So
change, as
you
we
can
know.
just,
Yeah.
renew at the new premium.
You're just renewing at the new premium without any health questions. Typically every company again is
Okay.
different. But
It's
it is.
right.
Yeah.
Okay.
Yep.
Oh, okay. So that's good to know too. Okay. So and then, sorry, and what did you, and then you said universal.
Universal, it's a bit more complex. I won't get into it too much. It's more of an investment
Okay.
component. So it's a life insurance policy with investing as well.
Oh,
I
okay.
won't bore you with the details on that. It's
Okay.
definitely like a lot of self-employed people will take advantage of it because there's tax benefits. And again, you're investing. It's probably for a bit more of a savvy investor, financial person, I would say.
Oh, okay.
But
Well,
it's a
that's
great
good to know
product
then.
too. Yeah.
Yeah,
Yeah.
absolutely. Okay. So then, and if that, but you also offer, actually, do you offer benefits? Like, do you have a benefits package or
We
no?
do.
Oh,
Yeah.
you
So
do. Okay.
we do. Yeah. Yeah. So we have health benefits that we offer, like group benefits that we can do
Okay.
for small business, for individuals as well. We have what's called like solo loan. So it's kind of like critical illness and life insurance for your mortgage, your loan, your lease, rent, even actually. It's actually a really, really good product. So we offer
For,
that. We
for
do
rent?
disability insurance, and then for rent, it can cover rent too. So,
Wow.
but it's
Okay.
amazing, but it's true. Like a lot of critical
Yeah.
illness will just cover, or disability will cover just, maybe your mortgage, but it can cover rent too. Yeah. Yeah.
That's
So it's a nice
actually,
option
that's
for people.
awesome. Well, look where we
Yeah.
are today, right? So imagine, so if we were
hmm
like, so we're in this scenario where some people aren't working and they're now getting the CERB benefits. Would this be something that
hmm
would cover, would
No.
help
So
the rent if they're like,
it's,
no? Okay.
it,
Sorry. Okay.
no, it's only, yeah. So it's more of a disability. So let's say
Gotcha.
maybe you got, you got COVID, you got something where you could not work. It's more of a disability plan for that, but it covers, it can cover
So it's
rent.
like, so it's like the mortgage disability that we have. So it's based on doctor notes, doctor follow-ups, and it's going to cost, and it's going to
Exactly.
extend for a certain period of time, right? Okay. Based on conditions.
Yes.
Okay.
Yes.
So, and then the other
Yeah.
thing you have,
Yeah.
so is critical life. And I know we talked about that. So what is critical life for the people that don't know?
So do you mean like critical illness, like the lump sum you get if you're
Critical
like a
illness.
living benefit?
My bad.
Sorry. Okay.
Yep.
So it's a living benefit. So it's not on death. It's on being diagnosed with something, God forbid, for everybody. But I mean, stats nowadays are pointing to people getting diagnosed with something rather than dying. I mean, the survival rate is so much higher. So people are getting a lump
Agreed.
sum, depending anywhere from 25,000 upwards of millions of dollars, depending on your need. And a lot of people
Right.
will use it for like if they're using it for maybe a spouse is diagnosed and they're using that money so the other spouse can stay home, look after them. Maybe they're going to travel and go for a different care in a different country to cover it. So there's all different kinds of reasons why people would take that. And again,
Right.
some people do a smaller amount, some people do 100,000. It's something we would go through on a needs analysis.
Right.
Yeah.
Which I think that's awesome. So, because you can combine that
Yeah.
with like your life insurance, you can get your critical illness, and then you can get your disability benefits too, right?
Correct.
So, which is like the income replacement, like in the event that you do get
Yes.
sick, kind of thing. So then you
Correct.
can get your income
Yeah.
replacement as well. which I think is awesome for that self-employed client. Like I've had it for years. And it's, again, it's one of those things, it's insurance, you hate paying it, but you know, you want to pay it, right? In the event of kind of thing. So it's always good to have too.
Yeah.
So, and
absolutely.
I think those
and it's on sale when
it's on sale.
When you're younger, as we get older. I always say, I'll quote people and they'll be, you know, they'll be young, they'll be in their 20s and 30s. And I'm looking at the paper and I'm like, you have, like, it's so affordable. It's so affordable. If I could go back, and we were pretty good, like we got good insurance when we were younger in our 20s. But I look at what it costs when you're young and you're healthy, and I know. Yeah. I wish I could go back, but anyway, it's still affordable in your 40s for sure. Don't get me wrong, but it's just so much more when you're younger. Mm-hmm.
Well, we always say that, right? The older you get, the more that you're going to pay. But the hope is that you don't have any sort of illness that restricts you from getting it, or you're going to have to pay additional premiums, right? So
or be declined, right?
Well, and there's that option too. Yeah, and you can only be offered what do they call it? Accidental. Is it accidental?
Better than nothing, but
right. So we were talking earlier about the kids kind of thing. You guys offer a policy for the kids, which I was never even aware of that one. So we do. It's up until the age of 18. So what was that?
So it's critical illness for kids. A lot of people are, you know, they would think, why in the heck would I want to do that for them? But the reality is, you know, we all have kids, and God forbid something were to happen, but it gives them a very, very affordable coverage when they're young. And the idea is not now that they're going to get it, but possibly down the road. So the way it's structured is, again, every company might be a little bit different. Ours in particular, we basically you pay it over 20 years, the amount. After 20 years, it's completely a paid up policy. So you don't pay any more. You can continue to fund it as a parent or a grandparent, but a lot of our clients, they'll have, you know, kids get money from grandparents and aunts and uncles, and you've got all this money, and what do you do with it, right? I mean, you can invest it for sure.
Yeah.
But this policy is great. You know, you can only have so many toys, but anyway, but you take the policy and the child, but it's completely paid up. So let's say hypothetically you did it when the child was 10 years old. It's paid up by the time they're 30. The adult now is 30 years old. They have this critical illness policy, and God forbid something happens, but if they're diagnosed with something, they get this payout that is given to them. And the beauty of the product is, let's say by the time they're 40, 50, 60, they are not diagnosed with anything, they can get all of those premiums back, but they don't have to wait till they're 65. They can get them after 20 years. So it's a great way.
But they can continue paying that for as long as they want.
It's a 20 pay. The child one's only set over 20 years. So it's paid after 20 years. You don't pay any more premium, and you maintain the policy. And you keep it. Ideally, I mean, you would never want to surrender the policy, because you would hate to do that and then you're diagnosed and you don't get your payout, but you get all those premiums back if you were to surrender it. Yeah. Wow, so it's a really great product. Even if you do even a $10,000 one, it's very, very affordable. For kids under 18.
Which is awesome, because my is 18 next month, so we'll probably talk tomorrow. Yeah, and we'll get that happening before, because I was like, because you know what, and we've been in, like, when you're on this side for so long, and you see families and you see people, it's like, why not protect that? And we see the cost of insurance. Like, I know I get it through creditor insurance, and I know it's cheaper with you, like with outside of that, because I know we're in group policies and you can handle it a little bit differently, but we see where the premiums go, and we see when people have to use it, right? So why not get it, like you're saying, when it's affordable? I think that's awesome. Especially when it's got that surrender.
Yeah, absolutely. No, the surrender is for the critical illness. It's a great product, but for life, a lot of people, I'm amazed, don't think about having the mortgage coverage is great. It is. I mean, you have that debt gone, you have an asset, but you still have property taxes. The biggest thing people, I find, don't think about is in a situation where a spouse is going to go, the income replacement. So the person can grieve for a year. Like, you really realistically have to think, okay, the mortgage is gone, but I still have taxes, I still have hydro. Like, I don't want to necessarily go back to work if I just lost my spouse. Maybe I want a year just to be with my kids and just, again, grieve. So a lot of people will add 1 year salary on or 2 year salary just to give them that peace of mind, right? Like, that I don't have to rush back to work. I don't have to pay. So and especially for, maybe wives that don't work, and the husband passes and
Yeah.
they're left with kids, I mean, I see it. It's a reality. It's not it happens, unfortunately.
It does happen, right? And they're not the fun conversations to have, but they are the ones we have to have. And you don't want to have it after the fact, right? But it's all about it's preparing. I agree. And I've said that to clients as well. It's like when you can get the money and you can control it yourself, like on I chat, not that I chat with friends a lot about life insurance, but when you have those conversations, they come up, it is like, why, like, you want to be able to control that. So whether you do pay off that mortgage or whether you don't, you have the option to even just keep the money in the bank account and then till you figure it out. And even just so it affords the payments. And like you were saying, for that wife that doesn't work per se, and it's like, you know what, but if you got young kids, you now need to hire somebody potentially to look after them. Like there's so many variables that I don't think we think outside that. I think they're good conversations to have. So I think that's awesome.
Yeah.
And you offer that. I think that's it. And you even offer mutual funds, like you offer some investments, which I think is awesome too.
Yeah. It's kind of, especially for young families, we do a lot of RESPs, even just to get them started for them, like $50 a month, just something, right? Or in a TFSA, just something like it's a forced savings plan. You don't even see it, right? So that's I'm a big believer in that.
Me too.
But for the life insurance, there's something for every budget. Like we have people that can afford $12 a month. There's something for that, and other people are like, we want, very sufficient coverage, and there's something for that. So there really is something for everybody.
Absolutely. Which I think is awesome. So then you are literally like one-stop shopping, right? Like really, like you're taking care of everybody.
We try to be.
Like
well,
you've got it all. I think that's awesome.
That's
awesome. So if anybody, I know more than likely past clients of yours you're still connected with them. So now you can help them with their, like all their insurance coverages and such.
Yeah.
But for anybody else that wants to connect with you, how do people get a hold of you, Jen?
So our, again, we're at Upper Ottawa and Fennel, post-COVID, come on and have a coffee with us.
Right.
But our office number is, should I say it?
Yeah, absolutely.
Yeah, okay.
Absolutely. Yeah,
so
absolutely.
Our office is 905-389-9371. The website, you can go to desjardinagents.com or jenniferbook.ca and it redirects you to our site. So yeah, absolutely. But my team's great. Awesome. I've got, we have 3 full-time. My one sweet gal just went on mat leave, so she just had a beautiful baby girl. But I've got
she had the
Jen.
Baby?
She had the baby. Oh,
so
nice. Yeah, she's doing good. But good. Christina and Jen, because we like Jen, are both fully licensed and they're awesome. They very passionate with what they do, and great customer service. So I'm really fortunate and grateful to have such a good team with me. So it's good.
I'm not surprised, Jen. You're a sweetheart kind of thing. I've known you forever, and it's just, you're just a good soul. You got good energy, so you got good people with you. So that's awesome. So thanks, I totally enjoyed this. This was, I learned something new, and we chit-chatted a little bit more as well. And so anybody who's looking for insurance coverage, they know where to find you now. So which is exciting.
Thank you.
And we will probably do this again one day.
Okay, sounds good. No, I thank you, Dale. I appreciate your time.
Yeah, I appreciate yours too. Awesome. And I will chat with you later, my friend.
Okay, sounds good.
Alrighty. Okay, have a good night.
All right. You too.
Okay, bye.
Bye.
Bye.